Okay. Punita Kumar Sinha, Managing Partner with Pacific Paradigm Advisor, joins us. Let's connect with her. It's been a while. We've not interacted with her. Punita, so nice to have you back on ET Now. Thank you for joining us.
Thank you.
I always say it doesn't matter what markets are. When Punita is on the channel, you know that she'll be smiling. So you think for the bulls, the smile is back, and is the smile here to stay for an extended period of time?
Oh, the smile may stay for other reasons, but maybe not from markets. So, I mean, yes, we are having a bit of a rally, but I don't think we're out of the woods yet in terms of all the uncertainty in the global economy, uncertainty with respect to what's happening with tariffs, and uncertainty with respect to the geopolitical relationships between the various countries. So I think we're not out of the woods. Markets were oversold. We've had a rally, but I wouldn't be surprised if we could, have another leg down at some point in the markets.
Okay. Punita, Cheryl made a great point that, guys, the tariffs have been imposed on Mexico and Canada, and they are large trading partners of US. But Canadian stock market and Mexican stock markets are in the green for the year, which means that whatever may happen to the tariff, the bottom line here is, or the grain of the truth here is that markets are getting immune to Trump tantrums, if I may use the word.
Well, markets are, emerging markets and European markets, international markets have actually outperformed the US markets this year for the most part. And that's because they've been underperforming for a number of years. And so this year, the markets like US and India, which were the big performers in 2023, 2024, are the ones that have taken a bigger hit. And the markets that were the cheap, undervalued markets relatively have the ones that have outperformed. So I don't. So part of it is the valuation, but the earnings of the companies will definitely get impacted, and maybe the earnings results haven't yet come out, and the earnings will probably take a bit of time to start showing the tariff fallout. So I mean, definitely if there are tariffs, that it's possible that the companies might see a slowdown in their sales, especially the ones that are exporting to the US. So that will show up in earnings maybe 6 months, 1 year down the road. And earnings estimates will start reflecting those downgrades in the next couple of months. So the markets may be going up right now, but the reality hasn't really sunk in into the earnings.
Okay, Punita, so what could be the talking point for rest of the year? For example, last 6 months, it was all about Donald Trump, tariffs, US debt, dollar index. For next 6 months or for rest of the calendar year, what could be the talking points which will just occupy everyone's mind?
More of the same that you mentioned. It will still be how the global economy is going to respond to President Trump's announcements, initiatives, and how the various countries are going to adjust. So there'll be a shift of trade that'll happen. And that's going to be a talking point as to where and which countries are going to set up alliances with which countries in terms of trading partners, because US definitely is going to be a tougher place for most companies to export to in certain sectors in particular. So they have to find alternative channels. I think that's going to be one big area of discussion that we're going to see. We are going to also see a lot of narrative on what's going to happen to the economic growth and inflation and then interest rates. I think there is definitely a fear that there is going to be a slowdown, and then interest rates will get cut faster than what people are expecting. So that also will impact currencies. Right now, last 2 years and few years, dollar has been the stronger currency, but I think it may or may not be the stronger currency this year, as we've already seen some reversal in some countries and some currencies are beginning to reverse the declines that we've seen in the last few years. So I think there will be all of that narrative that will happen this year. This is a year of adjustment because President Trump is setting a new regime for America. And that means it's setting the global economy in a different zone. So that reset is what is going to be, I think, the narrative this year.
Punita, everyone is of the view that 2025 may not be the year for Indian stock markets. Valuations, flows, tariffs. Do you concur with this view that India is a good to have market but not a must have market for this year?
Well, for the Indian investors, it's a must-have market because there is no alternative, right? I mean, we can't invest anywhere overseas, the Indian domestic investors. So that flow of money and that supply that continuously comes through SIPs. Yes, there's been a slowdown, and there may be reallocation to cash and bonds and gold and real estate and other assets, but equities will still be a primary asset class for the Indian investors. So there is support coming from there. But yes, for the foreign investors, unless the Indian valuations get a little bit more attractive, there are plenty of opportunities, whether it's in Europe, whether it's in Hong Kong, China, whether it's in other emerging markets. So those are definitely getting a relook. India remains, of course, a very strong, stable economy, and that doesn't change. So there will be always flows going to India, maybe not as much as they've been in the past. So if the valuations correct some more, I think there will be money again coming to India because we have a strong economic growth story that is independent only of the exports and the tariffs because we have a strong consumption base. And so that part of the economy remains relatively insulated from what's happening in the rest of the world. And I think that will attract investors back at some point in the future. But of course, the valuations have to be attractive enough for that money to come to India.
Punita, this is Cheryl also joining in the conversation. I wanted to get your view then. You did mention the fact that yes, the Indian investors have to look at Indian markets, but which pockets of the Indian market should one look at? Given the sense that we've seen a sizable correction, the valuations for financials have become reasonable. That's one go-to pocket what everyone is talking about. But apart from that, which other sectors do you think looks good? And are you also in the buy banks camp?
Yeah, I mean, I have been in the buy financials camp for a while. It hasn't played out last year, but I hope this will be the year that there will be a shift back to financials because the valuations are attractive. I think liquidity, which has been quite tight, will hopefully ease this year. And it's a sector that is a play on the Indian economy. And as long as the Indian economy grows, this is a relatively attractively valued way to play the Indian economy from a macro perspective. Of course, the credit, you have to be sensitive to the credit risk in certain pockets of this sector. So one has to be obviously careful. But I think definitely this would be a place that I hope will perform this year. And I think everything else that is related to the domestic consumption story will continue to attract interest, whether that means travel and tourism, whether that means healthcare. So there are a lot of safe defensive sectors, regardless of what happens globally. And those are the sectors I think one should focus on. The last few years, we've obviously had a big shift towards capex sectors and those that have benefited from government capex. And that obviously has seen somewhat of a slowdown because the government capex isn't growing at the same rate, and the private sector capex hasn't kept pace. But I think at some point, domestic manufacturing will also become a focus back because every country needs to focus on its own manufacturing, because we are entering in a world of more protectionism. And so the Make in India theme will again become important. And so I think you should stay tuned into what happens in that space, because that could again attract interest.
Sure. Punita, for the year ahead, does it also make sense to make that market cap classification? I mean, are you safer in larger caps as opposed to mid and smalls?
Larger caps are obviously safer, but they also don't give the same kind of return. So the larger caps, I mean, at most you would get nominal GDP growth plus minus some percentage points. So, if in a year like this where there's a lot of uncertainty, it makes sense to have your portfolio tilted more towards large cap. But then you're betting on the fact that, this isn't a year where you're going to have outsized returns. And therefore, you should be happy if you can make positive absolute returns of between 10 and 15%. And that's, kind of the space that large caps would give. But longer term, of course, you have to look for opportunities in the mid and small cap stocks. And those are the ones that are more volatile. Those are the ones that will correct the most. Those are the ones that will probably rise the most. And so there's more risk and more reward. And so you have to make that trade-off. Longer term, you have to keep looking for right entry points in small and mid caps. But large caps are definitely a safer place to be, especially in a year like this, which is a year of adjustment. And it's important to be focused on safety, quality, and predictability.
So Punita, if you have to, let's say, put your 10% asset in one market, and this is not India, which would be that market?
Oh, only in one market?
I mean, where would you be overweight 15-20% of your portfolio in a single market?
I wouldn't, the only market that is significantly, large enough and liquid enough where you would be seriously always remain overweighted for the very long term would still be the US. But in the very short term, I would still bet more on, I think, Hong Kong, China. In the very short term.
All right, Punita, I really appreciate your time. So glad you could join us. Well, gives me great pleasure now to bring on board Mr.
If you like this video, then like, share and subscribe to ET Now.